Anglo American, once the biggest company in South Africa, is a shadow of its former self, as the group has now been selling off assets and cutting jobs to raise cash and pay off its debt. In studio with me to discuss the challenges that is facing Anglo is Finweek editor Jana Marais. Jana, lovely to see you. We're talking Anglo. Things are a bit rough there at the moment, to say the least.
Absolutely.
Is it just about the price? Is this what's facing this former mining giant?
Look, I think all the diversified miners have been struggling, and really all commodity players, you know, the oil guys as well. And it's probably more that prices have been lower for longer than people anticipated. But this is the name of the mining game, right? You should know by now that it moves in cycles and that prices will come down, and you should be geared towards that. So for Anglo, I think the challenge really is to really start preserving cash and to pay off debt, to strengthen the balance sheet. And that's really the plan with what they aim to do with this big restructuring that they're undergoing. Whether it will work or not, that's, I suppose, a different question.
Yeah. And before we talk about whether or not it's going to work, because they've embarked on all these strategies, you said a lot of the other diversified miners are in the same boat, but Anglo seems to have been somewhat of an underperformer, though.
Yes, I think if I was a shareholder, I would be quite upset, and I think a lot of the blame should go to the previous CEO, Cynthia Carroll, much as I actually liked her. There's a lot of technical staff that left under her. She got rid of a lot of senior and very experienced executives, people like Neville Nicolau, who used to head up Anglo American Platinum, for example. And I think the other thing that she got really wrong was the big bet on Minas Rio, that big iron ore project in Brazil, which cost them billions, and that was so delayed that they basically missed the iron ore boom completely. And you have to ask if that mine should have been built in the first place, and I think the argument would be probably not, because it's such an expensive mine to operate, and at the levels where we see iron ore prices now, clearly was not the best move. So I think really a lot of blame should go on her shoulders. But then, there's a whole board that approves these decisions as well, so you can't just put it on the CEO.
Everything that they're doing now, I think this week we did get the downgrades.
Yes.
And then they did speak about selling off some of these assets, Kumbai and all. Do you think this is enough?
Look, I think it will all depend on what price they get for it. And I think that's what analysts are concerned about, is will it be enough, and would we actually need to go to the market and raise equity? And from the deals that we've seen so far, Tarmac, which they sold in July last year, they actually got a little bit more than what the market expected. So who knows? Let's hope for their part that they do. But I think the other point that one should make is that in a downturn, it's actually the time that companies should be buying assets that come up for sale at rock bottom prices. So you have to wonder, if this is a share that you want to be in, and if they have the right people at the top to steer it through these waters.
Anna, thank you so much for giving us that update on Anglos. Hopefully we'll be seeing better days and the strategy will work. Jana Marais, Finweek editor.